often hear about the importance of taking emotion out of investment decisions to avoid clouding judgment and to maximise returns. But is that always the case? This episode was inspired by a client story. They were looking to get into investment property, and while several options ticked all the usual good investment boxes, none of them really resonated. It raises an interesting question. How much of yourself should you bring into your investment strategy? Some will say none at all, but is that actually the right approach? That's what we're unpacking today. Today we're joined by Ara Salomone from State of Kin Design and Construction. Their award-winning work spans residential projects like Brick House and Shutter House in Perth through to high-end commercial spaces, including the Pan Pacific Hotel. Ara, welcome to the show.
Thank you for having me.
Now, how was my pronunciation of your surname? How good is my Italian?
Look, it was okay.
Yeah, not a glowing endorsement, but anyway.
We can work on it.
So, Ara, we're going to talk today about your journey in property investing, and obviously you did work along that journey with Momentum Wealth and Westbridge. You've also done some things outside of that. But firstly, just to give the audience some context about your background, you're obviously in real estate in terms of design.
I am a co-director of a company called State of Kin, and we offer services in architecture, interior architecture, construction and project management. So it's a family business. Everyone up the line from us has been involved in the building industry in one way or another. Construction, design, all of that. So it's something that's been inherently in my makeup since birth. But yeah, that's a little bit about Kin. State of Kin is the name of the company.
Good. And you do it with your partner, Donnie?
Yeah, so my husband, Donnie, and it's actually a lot of his family. I'm the ring in.
Tell us about your property investment journey. What was the first home or investment property you bought?
Yeah, so my husband and I bought a block in Mount Lawley. That was it was around 2014, 15, something, that era. And it was around the same time that we were starting State of Kin. So we designed and built a home called Brick House, and got a lot of attention.
Had a lot of bricks, no doubt.
It did, had heaps of bricks. And we lived in that for a couple of years, and we just had so many offers that it was sort of out of control. We weren't looking to go to market. We weren't looking at selling the home, but they just kept coming. So there was one particular lady that just, really went for it, and she ended up buying it. From there, we moved into an apartment, and this is kind of where you guys started to step into our journey.
Yeah. And then so you went into an apartment.
Yep.
Obviously, I'm assuming you made pretty good money out of it.
Yep.
After all,
I did.
Even though this is obviously in Perth, even though the market was a bit flat around that time,
Yep.
hopefully you still made some
good
money.
Yeah.
And then obviously kept running the business. What was the next foray into looking at getting into real estate investment?
I think once we had our own property and we sort of started understanding the mechanisms of finance, lending, loans, debt, we wanted something secondary as well. And I think when that equation came into it, it was a little bit out of my realm in the sense of how do we manage all of this from a financial standpoint, and how do we even go about it? I've got the lens from my architect eyes and State of Kin kind of values, and we kind of wanted to challenge what we thought we knew, and that's why we started asking some questions about secondary property investment.
Yeah, and I guess, did you think about just always buying a new property, being the background you're from, design and build? Or
I don't know what I thought at the time, to be honest. I really empathise with you guys, how you managed me and my husband, because I think having the background that I do, it actually made it harder to be able to figure out what it is that we wanted and what we sort of felt value in. Yeah.
So once you decided to get into that space, did you think about doing your own? Did you talk to groups? How was your decision process before you finally chose someone to help you?
Yeah, so like I said before, I think when you've got your primary residence and that's something that you've designed and built, that's kind of our bread and butter. It's what we know. I'm very familiar with that process. But as soon as it started becoming, about strategy and data and understanding market, we really needed to have a different lens and outlook on the situation. And that's what led me to start making inquiries with various brokers, I suppose, at the time. Now, I'd never done anything like that before, and I was completely new to that process. And what I found very, very early on was that there was no individual model. It was a cut and paste in terms of the actual asset as well as the service that they were providing. And every single different company we came across all just made me feel like I'm going against all of my values and what I believe in. No one was really willing to kind of shift the perspective or even necessarily hear us in terms of like what we brought to the table and what we could offer. And it wasn't until I was recommended to Momentum that we started having conversations with your team, and yeah, everything changed from there.
So I'm guessing they were promoting house and land sort of products?
Yeah, it was a house and land product, but it was kind of just like, here's your template and there's no modification for it, and this is just what we do. And it's like, pick this. What design do you want? And I was like, whoa. Whoa. No, this is my whole life's work is to sort of work around that model. Yeah. Not to say that it doesn't have its benefits, but I just have a different value set.
And I guess a lot of those services are pitched as free or not, but actually there's a lot of, people don't realise there's a lot of commissions in the background.
100%.
If you're recommending a product and it's free, you are the product. I think that's
absolutely.
That's a well-known quote out there in the market. So how did you come across Momentum Wealth?
So we use an agent that sells a lot of our state of kin homes, and she's very savvy. I believe she's also one of your clients. She recommended you. And then once we just had our initial inquiry, it just felt so natural. I remember walking in, there was 4 or 5 people sitting around one of the boardroom tables, and it was just, there was no template. It was just like, let us learn more about you. And that was the first time someone had asked us that in that journey.
Yeah, what you were looking for.
Yeah.
And so what were you looking for at that stage of your journey?
I thought I knew. I thought I was kind of dead set on what it is that we wanted to do. And that would have been maybe acquire a block just because it was something that we could build on, or find something that had a character element and, that had the potential for development. At that time, though, I think what misaligned for us is the finance and our expectations. And that's why throughout the journey with Momentum, we started looking at a lot of outer suburbs and also a lot of different typologies. We went through that journey and you guys were absolutely amazing about it, but I think it just brought me back full circle to understanding what my belief system is and values, and you were there to support it every step of the way.
That's always the challenge, self-employment and loans. The lenders, they vary in their policies, but sometimes it can be harder when you're self-employed to get a loan. There's no doubt you would have experienced.
100%. You know, we had money to essentially purchase, but we still couldn't get a loan. Also, we have to be careful that whatever we are bringing into our portfolio, we can sustain at the worst of times, and I think having all of that skill set from your team and having so many different people from data to lending, real estate, across the board, it was so helpful to be able to kind of navigate that process through one place. Yeah. You carried a lot of the weight.
So before you came to us, I believe you looked at a property in suburban Perth at Hamilton Hill, for those who may or may not know that suburb, and that was before you came to us, and you looked at that and didn't feel right. What was off about that one?
Look, this, for me personally, I think you've got yield and then you've got emotion. And sometimes the things shouldn't mix, but for me personally, it does. And I understand that from a strategy perspective, and at the end of the day, most people just want numbers, but I think with my background as an architect, my belief system's just too strong to my core, and I need to know that anything I'm investing in aligns with my beliefs. And I needed to know that it wasn't just an investment that I lose sleep over every night because it doesn't align with what I believe in. Yeah. Not to say that it wasn't a good investment. It, for me personally, just came down to like a gut feeling, and probably needing to, from that point, learning that we needed to look elsewhere and probably restructure our finances to find more money.
So Ara, tell me about that Hamilton Hill property. What didn't really resonate with you?
We actually went and saw quite a few properties in Hamilton Hill that you had put together. And I think it started to feel like it was a lot about yield. And for me, there was probably a lot of emotion that I needed to consider. That's just the way I kind of approach this. I felt like the investment wasn't about people in place, and it was purely a numbers game. And that's great for most people, but for me personally, I realised that my belief system is just something that I couldn't kind of like stray from. And there was something about the typology of home and that it needed money thrown at it to make it good versus having a good investment that you need to elevate. And for me, that was like something it took me a long time to try and understand. But when we finally got to that point that we realised, okay, no, we need to go back to the drawing board and refinance.
So it was the layout? I mean, that's always the challenge, isn't it? When the layout's not right, that's very hard to change versus the finishes.
Exactly right. And I think, even if you're throwing $100,000 or $200,000 at something, it's $200,000 wasted if it's still not good at the end. So, and I think I would have had to go a lot further to make it something that was just sort of base level reasonable.
Now, before we get on to the one you ended up buying, we'll talk about that in a second. Before you got to even looking, you had to restructure your finances. Do you want to just tell us a bit about that?
Yeah. Well, like we sort of mentioned previously, the self-employment aspect can be quite challenging when going to banks. They didn't care what we had or how much was going on. Plus, it was like during COVID as well, where the construction industry, my husband's obviously a builder, the construction industry was who knows where. But at the same time, after all the Hamilton Hill viewings, we realised that if we didn't restructure, we probably wouldn't get what we wanted out of it. So by doing that, we had to take a big step back. We had to relook at our lives. We had to make sure we were comfortable in sort of putting more towards an investment and having less to kind of live in the short term. And, there was a lot of soul searching there, and then waiting a minute because, I think I needed to recalibrate, and that was more important than the investment at that time. Even though the market was racing ahead and every day lost was, money, at the same time, I needed to be really, really comfortable with the investment that we were making. So once the strategy was figured out, then we could go back and try and get a loan again. And then when your team helped us align all of those things, it kind of went as smoothly as it possibly could.
Yeah, I think that's an important point. We'd all love just investment property just to be simple. We don't have to change our lifestyle and life goes on. But sometimes you've got to make those short-term sacrifices for longer-term gain, don't you?
100%. And I think that's exactly the reasoning we came down to. But at the same time, if it was something that was going to inhibit us so badly, then it's not worth the investment at all. Yeah. So, we're investing in our future because we want freedom in our life. Yeah. So if we can't get freedom now as well as later, then it's never a good investment. So
you got your finances sorted, you had your strategy, you realised what you were looking for, and you ended up looking at a property in a Perth suburb called Leederville. Do you want to tell us about that journey and what you really liked about that property?
Yeah, so after all of the refinancing and restructuring and aligning, we started looking in pockets that were a little bit closer to inner city. It actually started off with one in Subi first, and your team was there crunching numbers, figuring out development potential. We put in an offer on that one and we were blown out of the water by probably 5 other people because it was at that time that everyone was just going crazy trying to get property. We were disappointed. We kind of had our heart set on that one. And then the next day, one of your team called and said, hey, I think I found something off market. And it was the Leederville property. Amazing. It was a character home. It had one family live in it from like the early 1900s. It was an auntie who didn't have any children and then left it to her niece. We went and saw the site. It had a rear laneway. It had beautiful front character home on it. It had subdivision potential. There was so many things going for it, and we knew it was outside of our reach of touch, but we just bit the bullet and just went for it.
Yeah, and for the people on the East Coast who might be listening to that, Leederville is about 3K from the city. You'd probably say like maybe a Paddington in Sydney, or maybe a Fitzroy, or
Fitzroy.
in Melbourne, that sort of suburb. So those old style, beautiful houses. Yeah. And so when you looked at the site and the property, obviously the front house was beautiful, but did you go through a process to figure out if it had that development potential with the rear laneway?
Yeah, absolutely. So we quickly went into due diligence. I think as soon as I got excited, I just went straight into like planning. I wanted to know the zoning, what we could do, any subdivision potential. I know there was a small shortfall on the site, but given that we were keeping the significant trees and character home on it, there was always a compensation that the council was willing to look at. So I kind of went in full steam ahead my way, and then you guys and Momentum went in your way and really, really gave us some data on the numbers and what's going on in that area. And that was it.
And it's a great location. So you bought the property, you liked it, you did all the numbers, and then rented it out for a period of time. And tell us what you're doing now with that property.
Yeah, so we got the subdivision approval a couple of months ago, and then we submitted a development application for 2 separate houses. So we're currently doing documentation for the rear lot, which is a 2-story home. It's a 3-bedroom, 3-bathroom, beautiful garden, north-facing, rear laneway, contemporary design. We'll start construction on that this year and live in that one. And then The front home will be tenanted still. The girls that live there love living there and they're really happy. They're great tenants. And yeah, eventually we'll do a further renovation on the front house in keeping with the heritage concept of that one. But both have been submitted to council and approved already.
And when you're obviously doing the numbers, I know it's in your blood and building great quality properties, but of course you still need to make some money.
Mm-hmm.
And where are you seeing it at the end? You bought it at a good time, you bought a great site. How much do you think you'll be up by the time you finish, if you don't mind my asking?
Yeah, look, given that my husband's a builder, it's really great because we don't pay builder's margin on him. And given that I'm an architect, you don't pay architectural fees. So you're already way ahead in that aspect. The back build's more than likely looking like $1 million at a raw cost to us, which is, quite a lot as a raw cost, but the days of building our style of architecture for any less than, $6 grand a square metre are over. Yeah. So it is just the way the industry is now. So that would probably be the back lot, but and the front one, potentially half of that because we're not going a second story on that one. We're just doing a quaint addition to the rear. But the capital growth of the land has already just, it's skyrocketed. So it's worth it. Yeah,
and you would imagine the back one is going to be at least $2 million, if not more. And same with the front one by the time you're all said and done.
Absolutely. We sent you your team the development application drawings and we asked you to revalue, and you guys did an amazing job of that. When I got the valuation back, I was like, did someone check this? Is there like a mistake? Yeah. And they were like, no, that's right. And I was like, are you sure? And that is how much the land had gone up already. So yeah,
that's great.
Amazing.
Ara, so along that journey, you've also looked at commercial property as well. What made you look at commercial property as part of your investment portfolio?
I'm so excited to talk about this. It's going to get me really happy. So after working with all of you, or a lot of you, through Momentum, as you get more comfortable with the language, the dialogue, the understanding, the mechanisms of the industry from a finance perspective, doors open and conversations happen and one thing leads you to another. So we met with a few people from the Westbridge team at the same time as being at Momentum, and we just started chatting about what Westbridge does and the offering. At the same time that this was going on, my husband and I were already trying to set up a self-managed super fund separate to Westbridge. So it kind of was almost like a match made in heaven at the perfect time. We sat down, we spoke about what Westbridge is and what you do, the opportunities that are raised. And Donnie and I had always wanted to invest in commercial, but at the time we were 30 years old. How are we going to raise $40 million capital I shouldn't say that, some people can, but how are we going to do that and just buy a commercial property on our own? So once we learnt more about Westbridge, understood the system, that it's a syndicate that you can sort of all lean in and purchase within your limits or minimum limits, it just became such an incredible tool for commercial investing. So we started off with one. I am quite risky. I suppose my profile is quite high risk when it comes to investing, but I also don't jump into things I don't know. So we contributed the minimum contribution just to sort of get our head around it, how to use it, what was happening, how the distributions worked. There's so many different factors. And then once we started feeling really comfortable with that opportunity and asset, we then quickly diversified into industrial, medical. There's so many different ones and across different geography of Australia as well. So it was really great to lean into that. We then tied our self-managed super into that.
And I guess that's one thing that a lot of residential investors learn along the way. Residential is fantastic. You can make a good capital growth, but the yields just aren't really strong, are they? Like on a $2 million investment, you're probably getting $1,000, $1,200, $1,400 a week, whatever that is. But with all the expenses, it's a fantastic place to start. But our philosophy is that's not where you want to end. You want to get into commercial. Now, you got in relatively young. A lot of our clients in commercial are a bit older than you.
I think you had enough of me at that time. I don't think I stopped knocking on that door once you told me what Westbridge was. It was great.
And the income stream, obviously. Look, ultimately, that's what you want to do. At some stage, you get out of the day-to-day work, and the income stream from commercial is that 6-7%, isn't it?
Exactly right. Yeah.
Any particular sectors that you liked, or you just looked at what was available?
Well, it started off with sort of working towards what I was familiar with and what opportunity was there at the time. So I think the capital raise at that time was the Industrial Opportunities Fund. And I think I like to sort of research things and understanding that there was such a demand across Australia that there was no available areas for people to store refrigerated storerooms and all these sort of things, all of a sudden you start to learn more about all of these different typologies of investment. And I really enjoyed the background of it. I'm not in finance, I just kind of do things my way, the way I know how. So I just got really excited about that. And then when medical came out, that was something that I was really, really inspired by. And yeah, you've had so many of them along the way. I can't actually even remember how many there are anymore.
Well, I've got down here Ara 17 investments you've had. So you clearly do. And I guess that's the great thing you mentioned earlier. You could go and buy maybe one commercial property, but all your eggs in that basket. And that's what we're really stuck with in residential. There's not a lot of residential broad scale syndicates. Most people buy directly. But the good thing about commercial, you've got exposure to all the probably dozens of different commercial properties and dozens of different tenants in that investment pool, haven't you?
Yeah, and also the fact they're across so many different states in Australia as well. So, there's always risk in investment, but it's a pretty diversified risk, I would say.
If someone's listening to the podcast and thinking, well, I want a property that suits me, what would you recommend?
I definitely recommend that you understand your finances, and if you don't, find someone to help you that can. Think about what you want long term, not just short term. Understand your values and your upper ceiling, I suppose I could say, and invest from what feels right. If you can't sleep at night, don't invest in it. If you don't understand it, learn it before you do. And just interrogate people for information, not annoyingly, but just be an open book, be a sponge. Learn and hear people that are experienced in the industry. Ask lots of questions. Ask questions for people that haven't had success stories, because you probably learn more from people that have had negative or bad outcomes versus good all the time. So just ask a lot of questions. Yeah.
And in choosing a firm to ultimately go with, what would be the key things, asking lots of questions, what would be the key things most important to you when you're choosing a firm that you would recommend to somebody else?
I think, first of all, there's a relationship that comes before the investment. And if I'm not in a good business relationship with a person, I'm not going to feel good about my investment no matter how it's performing. So for me, it was all about the way Momentum and Westbridge heard us, listened to us, were able to tailor responses to us, but also knew when to put us in our place. You didn't put us in our place, is a bad way to say it, but you did. But, just to tell you, like, hey, no, that's not how you should be looking at this, and challenge us to think differently. You've all got such high qualifications and expertise in the industry, and we have our own way that we want to approach something, and I think the two went really well together. So the relationship is what made us stay with you.
So you're still very young. I know you said you've been in the industry for 20 plus years. Even you must have started, as I said, at 14. But where to from here in your property investment journey?
I really am enjoying the Westbridge side of things, and I think that's something that we'll continue to pursue forever. I think starting to see how the house unfolds that we start to build, and then going through that next journey of selling that, building the front, all of that. Getting that done will be the next goal, and just continue investing.
Ara, thanks very much for joining us.
Welcome.
Great to hear your story.
Thank you for having me.
So a few takeaways from today. A good investment isn't just logical, it has to feel right for the buyer too. And I think Ara's journey really shows how important that alignment is. It's also a reminder that when you're working with an investment company, it's a long-term partnership. And sometimes the smartest move isn't to push forward, it's to pause and wait for the right opportunity. That balance between logic and instinct is where we see the best outcomes.